Okay, so it's that time of year for our market analysis, now coming out with all the 2023 data. And Chris and I are going to go through the highlight reel and let you know what you really need to know. So let's get after it. All right, Chris, so here we are with the 2024 market analysis. And it's been a crazy year, and I think about the stats that we've got in our report that kind of show some ups and downs. Maybe let's look at the downs. The amount of inventory, new listings that came on the market, down about 7%. The number of pending sales in the marketplace down about 9% year over year. Number of closed sales down about 7%, right? And yet now you've also got this other one related, the days on market jumped up like 33%. And another thing jumped up a bunch, which is available inventory. And when we look at 2023, we've got a lot of detailed information in the report. I talk about sort of the 3 I's of the year that were the highlights, right? Mm-hmm. One of them was definitely interest rates. One of them was definitely insurance. We've been talking a lot about that. And inventory we've been talking about, frankly, for the last 2 years. And what I find to be fascinating, and I'm just going to turn to you a little bit on this, is how do you go from a situation where the number of new listings that came on the market is down 7% year over year, meaning the number of new stuff that came on the market is down, and yet at the end of the year, we've got about a 31% increase in the availability of inventory in the overall marketplace. How do you tie those two together, and sort of what's making all that happen?
Right. Well, I think it's really important to just understand that new inventory that hits the market is different from how much inventory we have on the market, because you're hearing two different things take place and you're reading two different things. The reason is the consumption rate. How many new pieces of inventory are getting consumed on a monthly basis relative to how much inventory has been put on the market. The thing that's interesting, though, is even though pending sales are down, demand is still here.
Oh, for sure.
Okay? And so why is demand still here? That's what we kind of want to dive in as deep as we can to kind of understand what all this means. Because if inventory is going up, yes, it's going up, but it's still lower than it's basically historically ever been.
Right, and we're hearing from the buyer perspective, there's just still not enough to choose from, right?
There's not enough to choose from. And so, but why is that? Maybe a couple reasons. People that bought in the last from maybe 2012 to 2022, they recognized some of the best interest rates for loans if they refinanced or purchased. So you got 10 years of refinancing or purchasing at rates that are historic, 4 or less.
Right.
And so those people, maybe they're not so excited about jumping into something else at a higher interest rate. And the other thing is, they like it here.
Yeah.
They like their purchase. Even folks that bought when the market was absolutely on fire, maybe they were trying to outbid other buyers. They bought something, and then all of a sudden they're like, hey, this is where we want to be. We're not putting it back on the market.
Right. That's that aspect of retention we talk about. Like there's this high level of retention in the marketplace that, frankly, after all these couple of decades we've been at this, I think it's probably the highest level. And you could blame it a little bit on the anchor of like that super sweet interest rate. Like, I'm never giving that thing up. I get that. But most people don't let an interest rate dictate their life. COVID, if anything, highlighted how appealing this area is. And I know that sounds like, okay, we're rah-rah, sis, boom, bob in the Lowcountry. But the reality is that it's outperforming a lot of market areas, and it's honestly a relatively good value, I think, if you start looking at some of these other coastal communities. So that retention rate, I think, is part of what's making that happen.
It's really important. Another thing to look at is if you look at these numbers a little bit closer. Let's take an example from the market report that I pulled this deep in there. But it's like inventory in a market like Windmill Harbor. It says it's up 250%.
Right.
Well, if I read that, I'm like, what in the world's happening over in Windmill Harbor? But the reality is, last year, there were 2 houses on the market.
Right.
Now there's 7. There's your 250% increase.
Right.
Now let's look at maybe 2019 before the pandemic. There were 16 on the market.
Right.
So now we're half of that. So you really got to look at that, and that's why boots on the ground and seeing and talking to buyers and talking to sellers and talking to other agents, we are seeing that demand is still here. Inventory is a concern because there's not as much inventory out there that buyers would like. So what does that mean if you're a buyer? It could mean that, hey, you might want to broaden your parameters, your search parameters a little bit more.
Right. Open up the gates a little bit.
Open up the gates a little bit, but be a little bit more open to maybe other areas. We've got so many neat places to live in Hilton Head. So if you're hyper-focused on one and you're not seeing what you want there, open those parameters up a little bit more. You just have to be a little bit more, resourceful.
Maybe flexible. Maybe flexible and considerate of that. And I think that one of the other things about, again, that contrast between number of new listings coming on but being low and then the building of inventory, one of the other things in addition to retention, I think, is pricing and condition. Yeah. That you've got some inventory out there that is sitting because it's not priced right and or the condition isn't right for what buyers are really looking for. And we're still in pretty much a market, it's softening a little bit, where buyers are pretty much looking for as turnkey as they can possibly get.
They are. What we're seeing behind the scenes is we're seeing buyers that are ready to perform. They're qualified and they're ready to perform. But what we're not seeing is the urgency of having to perform right now if something doesn't seem right. So buyers need to know that a piece of property has been listed. They have something to hang their hat on. They have, as far as a piece of data. There's some support for where something is or how something is positioned. They want to see that, and they also want to know that the property is in good shape.
Sure.
And they're being more and more picky about that. So as we meet with potential sellers, we go through and really look at that. Are there things that really should be addressed before you go to market? Because you only got one shot at that launch.
Yeah, absolutely. And we see that day in and day out, how there is that selective component to it. And we see it deeper into the transaction. There's more requests for repairs and all, some of that normalization. Now let's go back to the data really quickly, because the other one that kind of occurs to me, and there's a little bit of conflict here, is days on market. So days on market goes up, a third.
Yes.
And so average days on market in the marketplace now is 149 days. Well, my goodness, that's almost 6 months. It's like, so what's happening there? And it sort of runs in conflict a little bit with what we're seeing on the front line, which is in a lot of instances, things are still selling very quickly. And in a lot of instances, there's still multiple offers.
Yes.
So what's happening there on days on market?
Well, a couple things are going through my head as you're talking. I mean, that illustrates that the demand is still here because we are having sales take place quickly. We're having multiple buyers
jumping
on new opportunities. On the flip side, we have properties out there that get listed, and for one reason or the other, either they don't have good support, they're not priced correctly, or they've got some functional issues, or they've got some condition issues. Buyers are not willing to perform on those at the current prices. So if the seller has a mindset that, hey, I'm not gonna listen to the market. This is what my house is worth, and this is what I'm going to hold out for.
Right.
They're going to have to just sit for a while. And that's just the reality of it. And if they do reposition, then buyers might get a little bit more excited about it.
And so in those instances with something that's sat on the market a lot longer, when that hits the average, it's what's driving that up.
Oh,
so you've
absolutely.
got some of these properties that have been sitting on the wall. They eventually sold. They might have dropped their price a little bit, et cetera. But that's really what's driving that up as well.
And we're watching that original list price to sale price ratio closely, so that we can see, there are price reductions that are happening now.
Yeah.
People are trying to identify where the market is. But I think coming to market in the right position at the start, your advantage to get a successful sale in good terms, I think, goes way up.
Especially in an environment where in certain pockets of the market, there's just not a lot of inventory. So there are buyers that are wrapped and ready to go after something like that. So let's talk about pricing a little bit.
Okay.
Both median and average sales prices bumped up in the single digits this year. I think the average sales price bumped up 8%, and the median was around 2%. And so, it's interesting to me that last year and maybe even sort of in the latter part of 22, people were sort of waiting for the other shoe to drop. Like, hey, I think prices are going to settle.
Yeah.
And it has to do with that demand component there, supply and demand, of course, but that demand component here, not a lot of people in a big rush to sell, pretty dominant number of people that want to be here, and all of a sudden the prices kind of held and actually increased a little bit this year.
They did, and the average is up a lot more than the median because of some outliers. We had some big sales this past year. In fact, we had a $9.5 million sale. We had a sale in excess of $10 million this past year. Heck, I mean, if you look back historically at our MLS, there's only been about 5 or 6 transactions over $9 million, and we had 2 in 2023.
So in all those decades, 5 of them, and then last year there's 2.
And then you have other markets like Palmetto Bluff that's just going gangbusters right now, some big sales out there, some big numbers out there. So when you're looking at averages, all of those things, they really pull the average up. So we like to, if you're really looking at the market and want to know kind of how it's moving, I think a safer bet is to look at the median. And that's going to give you a kind of where the guts of the market is. If the guts of the market are moving up, they're moving down, if they're staying pretty steady, that's what we want to know.
And that positive trending exists. It continued. We didn't see a drop despite the 3 I's, despite there being a challenge with inventory, despite there being a challenge with interest rates, despite there being a challenge with insurance. Which, speaking of which, and kind of just transition to that with the balance of the report, we've done something different this year, and we've really dug in deep. So we've created a whole video series with the local experts. So we're talking to folks about what we call steering factors, right? Like, well, those 3 I's are steering factors. Do they influence sellers? Do they influence buyers? Do they influence the marketplace? In what way? And we talk about that in our narrative, but we're also drilling down in and talking to the experts right here in the studio. So we're talking to short-term rental folks, long-term rental folks, insurance, interest rates with the mortgage side. And heck, we even pulled in the mayor of Hilton Head to kind of talk about some more global things about what's happening in that specific aspect of the market. So, as always, we're super proud about what we put together. We work hard on this. We want to make sure everybody's educated, that they're kind of inspired, that they're working with the right numbers, and having the right context on it. And that's really the goal on that. So as always, we just welcome you guys to our annual market analysis. We hope you enjoy it. We're always open for comments, feedback, questions, etc. And we thank you for your time today.